All right, guys, welcome back. So let's have a look at NVDA. Today it's down 6.6%. So in a matter of like 2-3 trading sessions, stock is down from its highs almost 16%. And this level is basically after this split, 10-1 split. Stock has gone up crazy. I mean, it had no reason to go up after the split, but gave it all back. Stock at the moment sitting below its 5-day moving average, below its 20-day moving average. The 100-day moving average around 102-ish or so. Can it go there? Absolutely. But I'm going to be looking at, let's take a look at the daily chart. I'm going to be looking at this breakout area for possible upside trade. So if you take a look at this level 95, 97, that was like before everybody was screaming like that it's gonna go back above 1K, and it did it after OPEX right here after reporting earnings where the stock gapped. So I'm gonna be watching that gap fill, and of course I'm not expecting that the stock is gonna come flushing down straight to this level, which it can possibly do, but it can also chop around and slowly come to this level. But that's the area I would be interested possibly to go long NVDA. But until then, it can do whatever it wants. But at the moment, short-term momentum, if you take a look at 5-day moving average to the downside, 20-day moving average about to curl, but it's still to the upside. But one thing I want to mention here, well, let's take a look at highly option traded stock, right? And Nvidia has been there for a while, okay? Every single day. They have been milking it. So if this is something behind the curtains, a lot of people don't pay attention because they don't trade options. Highly traded volume, 6.7 million. Again, Nvidia with put to call ratio of 40% puts, 60% calls. Implied volatility still high. Well, now it's probably pretty good time to sell puts as well, since IV has gone up, but it can still keep going down. One thing that I was doing a little bit of a digging were, every single day, I don't make a video about NVIDIA every single day, but I was watching, I come take a look at the flow every time. I just go take a look at the option statistics at the end of the day, and I just filter out the biggest orders just to have an idea what option traders are doing. And even before the split, after the split, I don't know why, but I have seen these like 1 penny far outside of the money calls buys. These are buys, okay? Nobody will bid a penny even for a possibility of a Nvidia, which is 2.5-3 trillion stock, to go 80% in a week. No, nobody would buy this. Sell this, or nobody would place a bid. But somebody was doing this over and over and over every freaking day. And I was just doing a digging, but if I come up with something, but I don't know if you have an idea, why would one throw thousands of contracts? I know it's 1 penny, $1, but still they would throw these almost zero delta options far outside of the money, and they would increase this. If you're somebody who's just looking at the ratio, that would be very misleading, because you should also be watching what percent of the stocks trading at certain delta, like let's say 0 to 20, 30 to 40, 50 to 60, 80 to 100. Those things matter. And probability of option contract that has zero delta, there's zero chance that the stock will go to that price. But I have seen these many times. I don't know why, but there's a lot of shenanigans happened when this melt up happened. And if you are trading this name, you got to be very careful. You either day trade and make money, walk away. But many people who were short, they got screwed. And if you are somebody who is just like me, pays attention to option flow and just trades purely based on that, you have to be looking at the order flow every single day. So I'm gonna be watching it very closely and just reading a lot. I have been already digging about how market maker hedges themselves, because I know that part when you buy a contract close to the money, and this was new slightly. This is Reddit again. So if you buy, say, let's say something that has 30 delta, market maker hedges themselves with 30 shares. And as it progresses, as delta increases, they will buy more to the point where the maximum hedge for them is per one contract. If your one contract has delta of 80 to 1, almost getting in the money, then they will buy basically per one contract that you buy 100 shares. That's it. That's their hedge. But far outside of the money, why would one buy constantly every single day? It could be market maker shenanigans, but let me know what you think about it, and maybe somebody has an idea about that one. But I'll be doing a bit digging. But that's the update for Nvidia. I'm watching it to the downside, and I'm watching that gap to get filled. Thanks for watching. See you in the next one.